ICICI Bank is at 400 plus. State Bank of India is at 320, 330. Oops, that's my phone which is troubling me with the noise. Is at 320. So it's the large part of the heavy lifting in the market has really been done by corporate banks. But the reversal in ICICI Bank yesterday was very sharp, from 410 to 398. In the second half, in a sense, it really petered down very, very strongly. CK, ICICI Bank has been a rewarding trade. It's a trade which smacks of momentum. It's a trade where disproportionate amount of flows have moved in. Where do you think in the short term ICICI Bank is headed? Do you think now it's time to take some chips off the table and 400 could be a resistance band, or 400 is just a pit stop? We could be staring at stronger and better days ahead for ICICI Bank.
Well, let me start with the last part of your question. Are we looking at better days ahead for ICICI Bank? On that, the answer would certainly be yes. And this would necessarily, of course, be over the longer term, because the way ICICI Bank has made a comeback, it's not just from the last quarter or so. It's been on an improvement spree for quite some time, and although it was never a kind of a runaway case, I think that stock has simply kept building on the uptrend with a very, very steady higher top, higher bottom kind of situation, which is a unglamorous way of going up, but certainly the most effective way from a technical standpoint. Now, coming to the shorter term, is it slightly long in the tooth here? Maybe the answer on that could be a yes. The trading pattern of the last couple of sessions have certainly not endeared itself to the long holder, but at the same time there is hardly any price damage. The signs of profit taking or selling is if there is price damage. Until that appears, even in the short term, one should not really change their opinion. There is just a hint of some slight light unloading which is visible, which could be from traders. So the jury is still out on this, I would think, for the short term, but for the long term it's decisively up.
Morning, thank you for joining us. What are you telling your clients now? Has the bus left the station? If not, what should they buy now? Where can they make a quick 10% in the run-up to the election? Devang, that question is for you.
Good morning, Nikunj. Thanks for having me on the show. I think no, the bus has not left the station. I think that is always a feeling which a lot of people get into. Market is normally driven by that sort of a sentiment, which is a fear of missing out. Yes, the rally was a little too fast and furious for a lot of people to digest. But clearly the leadership which was lacking earlier, a couple of months back, if you ask me, the sectors which were sort of not touched normally were banks or NBFCs, and how delightful it is to see that the sectors which have taken leadership, out of the 900 points rally that we have seen, 600 points comes in from the top 5 banks, and out of the 6.25% rally, around 5% was contributed by the top 5-6 banks. So yes, clearly there is a trade still which is left, not only trade but on an investment perspective also. A lot of banks which are seeing a turnaround. Of course, people will say it's a crowded trade, and they used to say it just 1 month, 2 months back also, but there is a lot of money to be made here. Of course, after such a correction, there can be a bit of consolidation or correction which will augur well for the health of the market. But to my sense, a lot of participation is also started to come into mid caps. There is appetite for good quality stocks. So somebody who feels that he has missed the bus, my answer is no. There is still a lot of accumulation which can happen on lower levels or current levels, where a lot of participation will still come in, and probably the next 2-3 years there is a lot of opportunities left on the table.
I want to talk about what's going to happen to Eicher Motors, and just bring up that stock price as well for you. Vinod Dasari is now taking over as the CEO. Siddharth Lal has given up his executive role. Pankaj, do you think this is going to make much of a material difference, really, this swap now with Sid Lal out and Vinod Dasari stepping into Sid Lal's shoes?
So largely, if you look at what we have seen for Eicher, is that in some of the key markets like Kerala, despite the base effect going off because of Kerala floods and all that, we haven't seen really the kind of bounce in volumes. So I think volume growth, till the time company was delivering good volume growth, I think the company could sustain higher multiples. But I think this 9.5 lakh figure also is not that exciting enough. So my sense is, or my worry is that the valuations or the multiples would continue to sort of be under pressure, and which is why I think despite getting a good leader also, we don't expect much of a outperformance relative to the market overall, though within two-wheeler space we like more of Hero and Bajaj, where the multiples are far more sort of attractive. So from that perspective, probably that might be a space one can look at, but in general both Maruti and Eicher are still commanding quite high multiples relative to their growth.
All right, Pankaj, stay on with us. Lots more to chat about, but let's shift gears and go on to Trade Corner to find out some of the top mid-cap ideas to look at from a technical standpoint, given that we're just about a half an hour away from the market open. Well, going to connect with CK as well as Manas and Kunal yet again. And Dr. Narayan, start off with your top mid-cap calls.
Well, Intellect Design is something that I'm picking as a buy at the current levels. Nice consolidation, sectoral move yesterday would be in support of continued uptrends, and very good situation with the momentum charts on the daily time frame. This breakout pretty robust, open to close sort of movement yesterday should infuse sufficient new momentum into the stock to keep it going further. Immediate target 225 to 230, buy with a stop loss at 2110, 212.
All right, that's the top mid-cap bet. It's Intellect Design. What about you, Kunal? What is it that's interesting on the charts today?
So Delta Corp is what I've picked up for trade. I think the stock is coming out of a big consolidation. Last I think 9 months or 10 months, the stock was in a range where 225, 220 was acting as a support, and closer to 275 is where we saw a slew of resistances for the stock. On the weekly and the monthly charts, there are some indicator breakouts which have happened for the stock, and I think yesterday we saw a good volume uptick as well for Delta Corp. So I believe that maybe the stock is now trying to end this consolidation breakout, as the case with most mid-cap names. I would suggest a short-term buy with 290 approximately as a target and stop us at 262.
Yes, indeed. Delta Corp did stand out as one of the top movers in trade yesterday. So Kunal believes it's out of a phase of consolidation. Manas, what have you identified? What's looking interesting?
I think one can look at HSIL, where stock has broken the neckline of inverse head and shoulder pattern yesterday. We have seen a lot of volumes yesterday. Stock has broken its 200-day moving average also. Now the target of this breakout comes near to 340, 350. So positionally for next 3 to 4 months, your target would be in the range of 340 to 350. However, for very short-term target would be around 315 and stop loss should be 270.
Thanks very much, gentlemen, for sharing with us your top recommendations. HSIL, Intellect Design, as well as Delta Corp. Those are some of the stocks to watch out for. But let's continue with our discussion with the experts and Aisha, find out a little bit more about which are the other sectors that are looking attractive.
Oh yes, indeed. That's something that we're going to keep on our radars. But Kunal, I wanted to just pick up on the point as to how some of these corporate banks behaved in the latter part of yesterday's trading session. And ICICI Bank and Axis, even in HDFC Bank, they petered off from their top. Do you sense that profit booking could only accelerate in these names? Because that's where money has been made.
So profit booking should happen, but I don't see that profit booking could lead to a major correction for these stocks, because when you see a sector which has been a top performer, when you see a sector which has rallied the way the indices and the stocks have done, there is a lot of participation which has gone amiss into that sector. So stocks don't come back to those starting point. If you're expecting a 50% retracement for the markets, assumingly those stocks may retrace only 30% or 25% odd, because they have been one of the strongest sectors. So private banks is case in point, and even the PSU banks, where a lot of the stocks have rallied 30-35% in the month of March. So I don't expect a major correction, but yeah, maybe another a 5% correction, but that could be more of a prolonged. So maybe it might take 1 or 2 weeks for the stocks to come back and drop even 5%. So I think that's going to be the larger trend. In net terms, I believe that this should be a phase of consolidation for the index, which should be led by banking names and especially the private sector banks.
Reliance touched a 52-week high yesterday. Pidilite touched another 52-week high. Anox CK was talking about it, touched a 52-week high. ICICI Bank touched a 52-week high. Look, I mean, if index is at a 52-week high or at an all-time high, obviously there are stocks and some heavyweights have to do the magic.
But the combination of Reliance, Bajaj Finance, and then corporate bank, in this case it's ICICI Bank, that's like a, this is like, these are like the three horsemen which are making all the difference. So these are three leadership stock which are essentially moving from strength to strength. I think is clearly and explicitly visible if you look at the screen. Now from the mid-cap space you can talk about Solara and odd one out, you can talk about an Inox, you can talk about an Bata and odd one out, but this is a very healthy market. You know, now the breadth also had started chipping in smartly. Now before I throw a question to Devang on a stock specific question, let's look at the ET Now Greed and Fear Index. Where are we on that index? And the ET Now Greed and Fear Index will just come up on your screen, is towards greed. So guys, we are not towards extreme greed. This is not like a bubble kind of a zone. This is not a zone where you need to watch your back or the tail is wagging the dog now.
This is surprising. I would have guessed it would be an extreme greed zone.
Aisha, I think, you know, this is a mathematically derived algorithm based meter, but this also relies on the fact that extreme greed happens when you have solid market participation, you have solid flows, you have extremely low volatility, and you have large built up in the FNO space. Now you've not seen too much of FNO built up, you know, in the FNO space. You know, just one of those things which we would perhaps read in our kindergarten, the fox story, which is share aaya, share aaya, share aaya. So everybody on the street is saying correction aayega, correction aayega, correction aayega. The point is that correction eventually will come. But does it make time, does it make sense to wait for the correction and miss on this uptick, or do you want to wait for the actual correction? So that's a judgment call. My sense fundamentally is that it's too late to jump in fresh. You may miss 5%, but for that 5% you may end up risking 15%. That's my limited point.
Devang, is that what you're recommending to your clients as well, that now is not the time to jump in afresh? Wait for this froth to settle down, because the market will give us more opportunities, or maybe look at mid and small caps wherein there are pockets which are still languishing.
I think that's the specific call that we are taking, that a lot of the stocks which Nikunj was talking about, the leadership where it came from, almost the top 5 banks plus Bajaj Finance plus Reliance, all this probably you need to somewhere take a call that you need to slow down here. But overall, I think the structure of the market is such beautiful that you need to probably take a call that mid caps and small caps, which probably weathered the storm very nicely last 1 year, has to be taken hit into, and here there will be opportunities where you probably make a lot of money. So my sense here is the fuel clearly right now is the foreign money which is coming into the market, and people say it's liquidity driven. So all rallies are liquidity driven. You need to take note of that and probably start buying or accumulating good quality stocks rather than waiting in for a correction. And this has been more a rally of disbelief where a lot of people have been feeling left out.
A lot of people are feeling left out. Pankaj, let's talk individual stocks. Titan, Bata, Pidilite. There are 3 consumer names. They represent the consumption space. The consumption space is going through a visible slowdown, whether it is staples or autos. But yet, a Titan, a Bata, a Pidilite, they are standing tall. Do you have a view on these 3 stocks? If yes, which one?
So we like all the 3 stocks, especially Titan, because see, largely if you look at the share of organized players in the jewelry space is about 15 odd percent. 10 odd percent. Similarly, if you look at on the apparel side, the share of organized player is about 15 odd percent. So largely, if you look at our sense is that with a company like Titan, which has got a pan-India player, you really do not have competition on a pan-India basis. The valuations are definitely rich, but I think the growth outlook is quite intact, and you really do not see much of a headwind going forward for a company like that. And I think within the overall discretionary spending, except for auto, I think most of the other segments we expect that the discretionary spending will remain intact. So from that perspective, I think despite the stock being expensive, one has to sort of look at the bigger picture. It has been our portfolio pick and remains so, and I don't see a reason to sort of change it as well.
Auto, yeah. Abha?
All right, we'll come back to auto in a minute. In fact, we were looking at those numbers, Nikunj, and two-wheelers once again disappointing somewhat. I mean, overall the auto space, we were expecting to see slightly muted numbers this time around, but the two-wheelers in particular have once again been a little soft.
You know, that just makes this big hole in the assumption which market had that the government is going to be sending cash into the bank accounts, and that could lead to a rural uptake. That's not happened. You look at FMCG sales, HUL is completely on a different kind of an different kind of a projection. What they told us along with the Q3 numbers versus what they've communicated after that, they've completely changed their tone on volume growth. Two-wheeler companies, they're going through their hard patch, and I don't think in the short term that hard patch is going to revive anytime soon. I think the NBFC funding is back in the system also, but that's not really helping two-wheeler stocks. And within the two-wheeler space, Bajaj is the only one which is standing tall, largely because of an export dimension. So two-wheeler stocks are cheap, and a pure value picker would say, if you're buying these companies which have a dividend yield at 12, 13 times, 14 times, how much more is there to lose? But my limited point is that two-wheeler stocks were never expensive. They were never trading at P multiples of 40, 50 times. They were always in the mid-teens and early teens. So just because two-wheeler stocks are in the teens, I don't think one should be tempted to buy some of the two-wheeler stocks. If at all, you should look at Bajaj Auto purely because of the blend of exports. And I guess somewhere Rajiv Bajaj has also started sending these feelers that, look, we got the margins down because we wanted to gain market share. We've gained market share, and now we would like to focus on margin. So when you gain market share and when you increase margins gradually, that is a great process in which you actually would see a margin exponential jump in your earnings. So I think Bajaj could be not the dark horse, but could be the odd one out here.
Pankaj, what are you recommending to your clients when it comes to two-wheelers? Do you suspect that it's Bajaj Auto wherein you're safer because you've got that cushion of 30% exports?
So if you look at within two-wheelers, except for Eicher, both Bajaj and Hero are relatively attractive on a PE multiple basis. I think what our sense also is that probably the threat of disruption is will be there will be a largely urban phenomena, and compared to that, I think if especially Hero, if they've got a good since they've got a good rural portfolio, so my sense is the threat of disruption is relatively lower. I think what our sense is that last year we have seen good growth across, whether you look at FMCG as a pack, there was good amount of double-digit growth. So from that perspective, the growth on a higher base appears to be slightly lower. But I think that is one space probably one can look at within the two-wheeler space. Otherwise, I think, like I said, the entire sector looks sort of quite challenging from the overall growth plus the kind of multiples what they can sustain given the overall structural challenges.
Devang, which is one stock where you would say, as a house, I'm happy to tell my clients to allocate at least 10% of their portfolio? Which is one stock where you think that one can allocate disproportionate amount of sum? And before you answer, let me give you few options here. One, you cannot say HDFC Bank, you cannot say ICICI Bank, and you cannot say IndusInd Bank.
Even Axis.
Even Axis.
A good, very good question, Nikunj. So yes, so the stocks that you mentioned are always part of the portfolio, of course, and though it compounds at say 15, 18, 20, 25%, it looks very boring. I know that, but investments are not very interesting. They should be boring. But to answer your question, yes, where we are overweight on and what stocks we still continue to like, there are businesses in the building material space largely which have done extremely well, and these are part of the portfolios where we still have conviction. Of course, if you ask me, will buy today, the answer is difficult. We may accumulate it, but stocks like Havells, stocks like Pidilite, stocks like a lot of stocks like Cera, Kajaria, all these are going to do extremely well, and the numbers, if you look about from Havells or Pidilite, they have been rocking in the last couple of quarters, and the management commentary also has been quite bullish. So building materials is one sector where probably we are also hunting for more names. Company like probably Orient Electric, which probably has not yet seen a big run up, but is a big proxy play towards fans or electrical goods in the country. I think this is one space which is still not commanding that premium. The GST play happened a little initially before GST got rolled out, but then it fizzled out. So I think there is a lot of money still to be made here. And also, if you ask me on the capex side, probably there is a return of capex which every time proves elusive. But this time, after 6 months, 9 months, there are a bit of green shoots which show that there is a good probability of capex coming back. Of course, there are very difficult candidates here. Something like a Honeywell Automation, which is a pure MNC with return ratios, fit the bill here. Again, if you ask me, we'll allocate stocks here, 7, 8, 10 stocks in this type of spaces where probably a lot of alpha will be delivered.
All right, we're just counting down to pre-open there, and the setup, as we've been discussing this morning, is fairly positive. So all cues are intact, and we're counting down to key levels as well on the index. You know, it's kind of a wait and watch mode to see if we just continue that up move smoothly, or whether or not we have some amount of, you know, profit booking, minor consolidation, 100 points here and there before we continue further, according to some of the tech analysts. So let's see how it pans out this morning. So far, though, everything is indicating a positive start. US, Europe, Asia, everything was in the green overnight as well. Crude is on an uptick, currencies are stable. So all in all, you know, in terms of factors at play, they're positive and no adverse cues coming in this morning. Of course, the MPC meet is underway. That's the other big signal we'll watch out for this week, and we continue to get your voices on the election and markets as well. But Avan, really just a few seconds to go before we find out if we're heading into a positive territory today.
Absolutely. So we'll be monitoring those pre-open rates, and as you said, the kind of setup that we're working with has been fairly positive. But the question is, we've been seeing a very decisive move on the upside. Does that continue or not? Well, for now, the pre-open rates seem to indicate a fairly decent start, 0.5% up on the Nifty, 11,728. Remember, we're counting down to those record levels, watching that very closely. And for the Sensex, yesterday, after soaring past 39,000, then ebbing off, today it's a 100-point up move on the pre-open at 38,971. The currency as well being closely looked at, and 69.28 to the US dollar. So that's pretty much where we're starting off this morning. But we've also got a whole host of voices lined up today on the show. So we'll talk about the rally and how one should position themselves. Prateek Gupta from Deutsche Bank will be with us in 20 minutes from now to discuss his outlook on the markets. Not just that, we talk about the big PSU Bank merger, what the dynamics mean. PS Jayakumar, Managing Director, CEO, Bank of Baroda, joins in for an extensive discussion on this at 10:15 a.m. And up ahead on the show, tune in, we have Ramdev Agarwal of Motilal Oswal, and he joins in to give us a flavor of where he's placing his bets and his outlook on the markets.
Some big voices coming up on the show today, so stay tuned for that. We're also counting down to a market opening, pre-open, of course, indicating a steady start this morning. Devang, we keep trying to identify, you know, areas in the market that could still be a good value buy at these levels. I know you've also talked about, apart from banks, some of the building materials, capex, you know, themes along those lines. Just run us through really what the thought process is there and what you're looking at.
What we feel here is that clearly there is a demand which will come come post elections also, and there is also a nascent demand which is seen not only for the housing sector, for also infra capex. The government capex has already been done. It's slowed down a bit the last few months, but probably private capex, which is always, as I said, very elusive, that would also come to the fore. And with NCLT resolutions that is happening, and with a lot of banks clearing out their probably their non-performing assets, I think there is a good chance that corporate banks as well as the CASA-driven banks which we are talking about, the lending would also start, and this probably will give the economy a lot of fillip which was much needed. Of course, there is a slowdown which is happening on the auto lane, and on the high ticket consumption there has been a slowdown which is being talked about. So we have our portfolio space towards, I can say clearly, large cap banks, a few mid cap banks, a couple of NBFCs, again building materials, as well as a lot of as I said, some additions in the capex driven place. So FMCG consumer are still part of the portfolios for a little longer term. It's not a tactical bet, it's clearly a 2-3 year aspirational consumption which India is into that cycle. So that I don't feel low ticket consumption will slow down. So these are the thoughts behind the sectoral composition, if I can say, financialization or formalization, which is clearly leading the course for the portfolio construction.
Okay, Devang, stay with us.
Devang, even the Panwala on the street knows that Z promoter would be offloading about 15 to 20% stake in order to get out of this debt hole. But how much of the news is in the price? I mean, for if anybody who plans to buy Z at 410, 415, can they make 10%, 15% because of this transaction?
I think extremely difficult to take a call, Nikunj, here, because a lot of speculations going on this side, when the stake sale would happen, and why are the promoters selling the stake. As you rightly said, there can be multiple reasons for that, maybe because of the liquidity crunch, or maybe because there can be some liquidity issues which they are facing on the cash flow front. So ideally, I think rather than taking a punt here on the news flow or whatever you don't know, I think the fundamentals of the company, of course, nobody can challenge, are very good, but this type of a situation sometimes makes you a hero or a zero as an investor or a trader rather. So my sense is there are a lot of good businesses which we already talked about, and people know where there can be a lot of money made, rather than getting into a company or a stock rather where there is a lot of news flow which is expected every single day and where promoters are themselves exiting. So my sense is rather don't take a trade if you don't understand, or do trades with your respective risk profiles in mind.
I'll move away from Z and just move to a space which also has seen a lot of price action and we've not spoken about it, and that's the insurance space. Devang, anything you like in the insurance space? The block deal in ICICI Pru is over. I checked on ICICI Lombard yesterday, it was at a 52-week high. What's going on in that space?
Clearly, there are two portfolio picks, if I can disclose with a disclaimer that we hold it in a lot of client portfolios. One is ICICI Lombard, which probably got a lot of fillip in the last couple of quarters, and the management commentary was quite bright, and whatever happened for the 3 years insurance for the vehicles also helped it a lot. And general insurance, being a general insurance company, it got the benefit of that news flow. Plus the numbers that we expect as an insurance penetration in India, general insurance is really pathetic. So that going forward can be a structural story. Second, we like the life insurance space as well, where there are candidates like HDFC Life or ICICI Pru, which overall, if you look at the post-listing period, they have generally been laggards. This can be probably a structural story where insurance in developed markets command market cap as good as banks. Of course, we are not moving anywhere towards that. But if you just see the market cap of HDFC Bank would be at 7 lakh crores and HDFC Life would be at 70,000 crores. There is a lot of gap, which I'm not saying will be filled immediately, but somebody with a 2-3 year horizon, I feel that insurance probably should be part of the portfolio, where it won't give you short-term fillip, but medium to long-term, this is a sector which one needs to be on the back of penetration, which will increase, and density of insurance, which will also increase.
Devang, we saw a little bit of a catch-up coming in yesterday in some of the IT names, some strength that was starting to build there. Any outlook on the IT pack and whether you expect that to continue?
I think IT, for the best of 2018, the entire story revolved around IT, and I think the sector rotation which is right now happening, probably banks led the course, followed by Reliance, and now if there is sort of a market leadership issue at all, I think IT would come in to fill that pack. I think the global markets, what we are seeing is on a recovery phase. US, though there are talks about recession or a slowdown, which nobody knows, data points don't indicate, or data points indicate contradictory sort of data. So my sense here is that IT, you need to be extremely selective. It can't be a structural bull run which we saw in IT last year. It has to be part of the portfolios where we are a bit underweight, I can say, but HCL Tech or TCS type of businesses, large cap IT is what we like, and these are some selective bets we take in IT.
All right, 2 minutes to go. But what has this market